Hello, this is Ronnie. I'm back here with a clip taken from a very long video that I just finished to record for my subscribers. It's 84 minutes video. It covers a lot of markets. Something big happened on Friday in the stock market in the US. I think that we have a trigger, we have a signal for possibly quite an interesting situation developing. So that is covered in the long video in great detail. I would like to take the opportunity to thank you for your support. My channel appears to have now run to as much as 402 subscribers. I have 402 subscribers. I also show that there was quite a bit of interest. People have viewed the video more than 1,000 times in the last 6 days. Yes, the very recent video that I put. So thank you very much for that. While the special offer that I had last week expired, it expired on the 7th of July, you can nevertheless try out my service. If you go on my website, you can try the daily video service trial for only $2.99. That's basically giving you access for 7 days. Okay, you'll have access to today's long video if you're interested, plus the rest of the week. And if you prefer the weekend video service trial, what happens, it's the same price, $2.99 plus VAT if it's applicable, and that gives you access to two weekends video, two long weekends videos. Okay, so this if you apply, for example, today, you will have the one of this weekend and the one of next weekend. Okay, and the trial does not lead automatically to a full subscription. That's totally up to you. At the end of the trial, your access expires, and then it's up to you to see what you like to do. I hope you enjoyed the clip that I added today, and look forward to see you on my website. Wishing you good trading. Bye now. Okay, that's silver. That's silver priced in US dollars. That's the daily. And I'm beginning with silver because the wave count in silver appears to be clearer. There is no major change. It is still looking very bullish, still looking like the structure is holding well. No major support levels were even tested, let alone breached. So there is absolutely no reason for us to abandon the bull at this point. The bull is in full charge. Yes, on the daily, we are assuming we have seen a 1, a 2, and that's behind us. We are now in a giant third wave. Now, even if you don't agree with that and you think that this is an A and that's a B, even so, we don't have the C complete, because the move that started from this spot has not delivered the 5 legs that we are looking for. And I said no major level was, we didn't have any level that was breached that would require reassessment of the wave count. And you know very well what I'm talking about. I'm talking about the level of 18. If it broke down under 18, then we would have to sort of reconsider the whole thing, and I would imagine maybe we would go into some big B or something. Yeah, there could be a lot of options opening up, but we just don't need to consider it at this point, because we are still doing fine with our, if you like, straight and very bullish wave count that I'm showing you here. So everything is on track to continue higher. This is still taken best as 1, 2, 1, 2. That's a 3. That's a 4th wave. After the employment report that we had on Friday, silver and gold dived, and I was saying to myself, yeah, they're not going anywhere. This is just a reaction. It's part of the correction, and I was comfortable treating it as a correction as long as it stayed, you know, well away from 1850. So I didn't really see an issue, and it came back towards the close. So as far as I'm concerned, this is confirming the strength that is still inherent in this trend. And let's have a look at the 60 minutes. So we start from here. That's the 60-minute scale. That's a 1, 2, 1, 2. We came up in a 1, 2 tiny here. You see that 1, 2, 3, 4, 5 terminated the third wave, and that gave us the correction. 4th wave. It appears to be complete. Now, one thing should be very clear. I assume that the 4th wave is done. Okay, and I don't see any reason why we should not assume that. At this point in time, that looks fine. That's an A, B, C, D, E. okay, spiked under the bottom here, the stops, run back up. What should not happen now, and this is the 60-minute scale, what will call into question my analysis here, my wave count, the structure that I'm using, would be this. Okay, if silver doesn't hold, I mean, it comes back, it needs to retest this, and for some reason it begins to drop under, that's not good. That's definitely not good. That's a bad sign. And as I said, that could lead to reassessment of the wave count as soon as we break under 18. So we are very clear about the structure. We know exactly what should happen, what should not happen. Okay, staying above 1950, hanging around here if it needs for another day or two, that's fine. The idea is that we're going to see it marching higher in the coming week. That is the game plan. It should do that. It doesn't do that. It does anything that is different, something like that, then you know this is trouble on the horizon short term. It's not going to turn silver bearish. Yes, no, I don't think silver is going to a bear market, but it will require reassessment of the wave count. We may have to consider a different structure. Now, this is silver priced in euros. Remember, I covered it during the week. That's the daily, and I wanted to revisit this chart. You can see that we have a 1 2 1 2 1 2 fairly clear, and that also the breakdown here after the figures really didn't generate a major break of the entire flow here. It's still looking very much on track, so I'm not changing anything. It appears to me that that should continue. This should continue. The next level of resistance, and as I explained during the week, the next level of major resistance will come at around 22. And right now we are at 18.31. So there is quite a bit of road to cover before we have to tackle the issue of major resistance here. Trading trading silver against euro basically is a very good idea, because as you can imagine, the euro is a lot weaker than the dollar. We have found out through various charts that we have used. So trading the run in silver against a weaker currency than dollar, of course, makes a lot of sense. Now, this is the chart of gold in 60 minutes. That's line style. The reason why I use the line style is because it helps me to sort out the wave count in a way that otherwise I would not be able to do, because of the spikes, the panic spikes. And I'm relying on the notion that for Mr. Elliott himself, the working with line style charts was good enough. So I think it should be good enough for us. And the wave count that you see here coming from the bottom here is really aligned, I would say, perfectly with what we have seen in the case of silver. Okay, so we have 1 2. We have 1 2, we have run up, we have a 1 2 3 4 5 3, and a 4 3. Gold came down, but reversed sharply on the close. There is no issue. I mean, there is no danger right now for the bull. If it broke down under this level, which is just under 1330, okay, if it broke down under my orange line here, then I think I would have had to reassess the wave count. Maybe something else is going on here. But right now, staying at this zone, we're at 1360, 75, hanging around here for a few more days. I wouldn't like to see it staying here for 1 week, yeah. But let's say 1 day or day and a half, and then continuing higher. That's exactly what we want to see. The wave count is supporting the bull. The wave count is suggesting a lot higher highs on the horizon. Okay, this is a very interesting chart. This is gold trading against Japanese yen. Okay, this is the price per grain. We are seeing here the monthly going back to 1997. But as you know, the big bull market in gold started around this time, around 2000, 2001. In the case of the yen, it shows that the bottom was hit in 1999. And we have scored the first leg, in my opinion, right here. That was a second wave. That was the crash of 2008. It looks minuscule on a log scale. Okay, that's a log scale, and I think I don't have to introduce at length what is going on here. If you are familiar with the basic patterns of the Elliott wave principle, you know that this is most likely a triangle in process, and it's been going on for a long time because we are dealing with a monthly scale. And if I'm right in reading this chart, we have a 1, 2, 3, 4 in process. So that means that when the fourth wave is done, the gold is going to rally very, very sharply. It's going to run above the levels scored here in 2013, delivering the fifth leg. Now, don't forget, this is showing you the log scale. Yes, if I switch to a normal scale, you will see that, of course, the projected move could be then seen to be huge. I want to show you a chart that that is gold, okay, trading against Japanese yen. This comes from a website that I already introduced in the past. It is called Forex. Do you see it here? FX Top, forextop.com. And you go on that website, you will see enormous amount of pairs. In fact, I think almost all the pairs that are traded in the world, including gold and silver, and you can start an analysis. You get the price data going back to 1953, if I'm not wrong. Yeah, 1953. Yes, from January 1st January 1953 up to present time, and this gives you an idea, in fact, what I think would happen in gold versus the yen. As you remember, we were talking about the fourth wave. We were talking about the bottom. Yes, the rally started from here. We took this as a 1-2, okay, on my chart. You remember that? And we took this as a 3-4. I mean, that's a 3, that's a fourth wave. So in fact, the idea is that if the projection will continue to work, we are going to see the fifth leg eventually going to take the top of 1981. Do you see the, I don't know if you can see that, the 1981 top, the spike top. So the yen, the gold yen is telling us there is a huge move coming in gold against the yen that will most likely test and potentially exceed the high that we have seen in 1981.